Okay, so you're tuned in because you want a deeper understanding of how NASDAQ futures might move in today's New York session, right? And specifically, you want to look at this through the lens of Smart Money Concepts, SMC.
That's right.
We're going to go way beyond the typical daily market chatter you hear everywhere else. We're giving you a laser-focused breakdown of what we think might happen with NQ futures using SMC. That's the mission today.
Yeah, to get this perspective, we've gone ahead and we've analyzed recent data from, well, a whole bunch of sources, really. You got your usual suspects like CME Group. Then we looked at Business Insider, Investing.com, even looked at Light Finance and TradingView.
Lots of places. So what kind of picture is emerging from all of this?
Well, the main thing that jumps out is that there's a pretty consistent price range that keeps popping up for NQ futures. Like most of them are hovering somewhere around 24.50 to 25.30.
Okay, so that's the general ballpark.
Yeah.
But I did notice Light Finance had a figure that was a bit lower.
Yeah.
Right, like around 2029 or something.
You know, it's funny you mentioned that. Yeah, they did seem to be a little bit off from the others.
Well, I mean, it's worth remembering, right, that these little discrepancies in price can happen all the time.
Yeah.
Especially with different data feeds and the market's always moving.
Oh, absolutely. You got to keep that in mind for sure.
Before we go any further, I just want to do a super quick refresher, just so everyone's on the same page.
Sounds good.
The NQ contract, right, represents $20 times the NASDAQ 100 index, trades under NQ on CME Globex.
Right.
And most importantly, it's basically running 24/7. Which means, anything happening globally can have a really fast impact on the price.
Oh, yeah, for sure. And I think one of the big things to keep in mind as we're kind of walking through all of this is we're basically painting potential scenarios. Like we're saying, okay, if smart money were to operate based on these principles, these are the paths that things might take. It's not like we're saying this is definitely going to happen.
Yeah.
It's more about understanding how the pieces might fit together. You know what I mean?
Totally, yeah. It's about that framework, not a crystal ball, right?
Yeah, exactly.
Yeah, because trading, it always has risk.
Yeah.
And our goal here is to help equip you with a little bit more information, a little bit more of an informed perspective.
Yeah, that's it.
So let's dive into it, right? Let's talk about these potential scenarios. Let's start with a bullish outlook. So assuming the recent market structure is kind of hinting at a bullish lean, what are some of those key areas on the SMC map that we should be watching for?
Okay, so let's say we're working with a bullish market structure.
Right.
The first thing we'd be zeroing in on is potential retracements. Are we seeing any moves back towards those bullish order blocks, for instance? Or maybe the filling of bullish fair value gaps?
Okay, now hold on. Let's break that down a bit. So those bullish order blocks, for someone who's maybe just tuning in for the first time,
Sure.
what are we really talking about when we say a bullish order block?
It's basically like, think of it as a price level where you saw a lot of buying interest in the past, like a big chunk of orders went through at that level. So if the price starts coming back to that area and it actually holds up there, it kind of acts as support. It's like saying, hey, buyers are still interested here. And that could be a sign that, yeah, maybe this upward momentum is going to keep going.
Interesting. And where would those targets be in that kind of scenario?
Well, the natural targets, right, would be those liquidity pools that are sitting above the recent swing highs. You know how those highs, they tend to be where people take profits, maybe some stop loss orders get triggered?
Oh, yeah. Classic.
So those spots kind of become like magnets for the price in a bullish scenario.
Okay, so swing highs become magnets. Got it.
And the odds of this whole bullish thing actually playing out, they get a whole lot better if we see what we call confluence. Like, let's say you have a bullish order block and it just happens to be sitting right inside a bullish fair value gap.
Oh, I see.
That whole area suddenly becomes super interesting. Like, that's where the real buying pressure might build up because you got these SMC elements all lining up together. It's like the more of them pointing in the same direction, the stronger that directional bias gets.
Okay, that makes total sense. Now, flip the script. Let's say we're looking at a bearish scenario for today, using this whole smart money concept framework. What would be some of those key things that would jump out at us?
All right, so let's say the market structure is hinting that things might be headed south, right? We're bearish. Now, we got to switch gears a bit. In this case, we'd be watching for those rallies, those little upward bumps that might run into bearish order blocks, or maybe even push into those bearish fair value gaps.
Bearish order blocks, those are basically like the opposite of the bullish ones, right?
Exactly. So Instead of heavy buying, you're talking about a price level where there was a lot of selling going on, a lot of selling pressure at that point. So if the price comes up to one of these zones and it just hits a wall, can't break through, it's like saying, hey, sellers are still in control here. That could mean we're looking at a continuation of that downtrend.
And the targets. If things really start heading south, where's the price likely to go?
Well, think about those liquidity pools that are sitting below the recent swing lows. Those are kind of your prime targets in a bearish scenario.
So it's like the bullish case, but everything's just flipped around, right?
Precisely. And just like before, the more of those bearish SMC elements you have coming together, that confluence, the stronger that bearish outlook gets. So, if you got a bearish fair value gap that pops up right below a bearish order block, that's a big red flag. Like, hey, watch out, sellers might be getting ready to unload right here.
Okay, so bullish, bearish, we got those covered. But what about those days where the market just can't seem to make up its mind? It's not clearly bullish, not clearly bearish. Price just keeps bouncing around in a range. What do we do with SMC then?
Yeah, that's a good question. So in those range-bound situations, where neither bulls nor bears have a clear upper hand. Well, the price usually starts to consolidate within a certain range, like it's stuck between a floor and a ceiling. And in these cases, those smart money traders, they're going to be paying super close attention to what happens at those boundaries. Like, how does the price react when it hits the top of the range, the resistance? How does it react when it hits the bottom, the support? And it gets really interesting if those boundaries happen to line up with order blocks or those liquidity zones we were talking about earlier.
So basically, those range boundaries become the key levels to watch.
Exactly. And the real game changer is when you get a breakout from that range. Like if the price suddenly punches through the resistance or cracks below the support. Especially if you have some confirmation from those SMC elements, that could be the signal that we're about to see a whole new directional move.
I see. So breakouts are crucial in a range-bound market.
Absolutely. And while we're laser focused on all these technical SMC setups, right, there's another big piece of the puzzle we got to keep in mind, especially for today's New York session, the news.
Oh, yeah, those economic releases. Can't forget about those. They can really throw a wrench in the works, can't they?
Oh, absolutely. I mean, these scheduled economic releases, they have the power to inject some serious volatility into NQ prices. Think about it, right? You got announcements coming out about inflation, interest rates, how's the employment situation looking, what are those Fed officials saying? All of this can have a huge impact on how people are feeling about the market, and that directly translates into price action.
And when we're talking about smart money players, how do they tend to use these news events to their advantage?
Well, it's really fascinating. These large institutions, they're super smart about how they operate. And often they'll use these news releases to kind of nudge the market in the direction they want it to go. They might even, create a bit of short-term volatility on purpose just to shake things up a bit. You know those stop hunts people talk about?
I've heard of them, yeah.
Yeah, so that's often what's happening. They'll push the price towards these areas where they know a lot of stop-loss orders are sitting, trigger those stops, and then reverse course. It's all part of the game for them. But for less experienced traders, it can be really easy to get caught up in the headlines, react emotionally, and end up on the wrong side of the trade. That's why it's so important to be aware of that economic calendar, know what's coming out and when, and think about how those releases could interact with that technical picture that we're building with smart money concepts.
Right. So always got to be thinking ahead, anticipating what might happen. So you mentioned a hypothetical schedule of economic events that might be coming out today. Can you walk us through that real quick and how these releases might kind of play into our whole NQ analysis?
Sure. So let's just imagine for today's New York session, we might see the initial jobless claims numbers get released around 8:30 a.m. Eastern Time. Now, this is usually considered a medium impact kind of event. It can cause some ripples, but it's not typically a huge market mover. Then, a couple hours later, around 10:00 a.m., we could get the ISM manufacturing PMI number. Now, that one tends to be a high-impact release. People pay a lot of attention to that one, so that could definitely shake things up a bit. Then, later in the day, maybe around 2:00 p.m., they might publish the FOMC meeting minutes. And that's another high-impact event. Everybody's going to be poring over those minutes, trying to read between the lines. And finally, to wrap things up, we could get a Federal Reserve Chair press conference around 3:00 p.m. And those, well, whenever the Fed chair speaks, people listen. So that's almost always a high-impact event as well.
Wow. Okay. So that's a pretty packed schedule. Lots of potential for some big moves there. So how do these releases kind of fit in with those bullish, bearish, and range-bound scenarios that we were talking about earlier?
All right, so let's play this out a bit. Let's say our SMC analysis for today is leaning towards a bullish scenario. Right. Now, is some positive news comes out, like let's say the ISM manufacturing PMI number is way stronger than expected. Well, that could be the fuel that's needed to push the price up towards a bullish fair value gap, or maybe up towards that liquidity sitting above those recent swing highs. But on the flip side, if some negative news comes out, that could really throw a wrench in that bullish setup. It could even, make that bearish bias look a lot stronger, especially if we were already seeing some bearish SMC signals before the news hit. And those high impact events, those are the real wild cards, like the FOMC minutes or the Fed chair's comments. Those have the potential to trigger some massive price swings. We could see breakouts from a range or even a complete reversal of a short-term trend. It all depends on how the market interprets that information.
Right. So the news can be a real game changer, for better or for worse. Okay, so we've covered those potential scenarios. We've talked about the influence of the news. Now let's get down to brass tacks here.
Yeah.
How do we actually translate all of this smart money concept stuff into actionable trading considerations? For someone who's sitting there watching NQ futures during today's New York session, what are the things they need to keep in mind?
The key takeaway here is that those big institutions, they're the ones who are really driving the price action most of the time. So the most important thing is to keep a close eye on those order blocks we've identified, those fair value gaps, and those potential liquidity pools. Watch how the price reacts around those areas. That's where the real clues are. Let's say, for example, the price is pulling back, and it happens to retrace right to a bullish order block. And let's say that order block also lines up with a traditional support level that you've been watching. Now, if you start seeing signs of buying pressure there based on your SMC principles, well, that could be a really nice long entry opportunity. But of course, only if the overall market structure is supporting that bullish outlook.
Okay, that makes sense. Now, what about looking for short opportunities? How would we use SMC to find those?
Same idea, really. Let's say you've got a bearish order block that's sitting right near a resistance level that you've been tracking. If the broader trend looks bearish and the other SMC elements are lining up, that could be your signal to start looking for a short entry. And don't forget about those fair value gaps. Those can act as entry points, yeah, but they can also act as targets for price movement, or even zones where the price might reverse, depending on what's happening around them and what the market structure looks like.
Okay, so multiple ways to use those fair value gaps. And what about those liquidity pools we were talking about? The ones above the highs and below the lows. How do those factor into our trading decisions?
You always got to be aware of those liquidity pools because that's where a lot of stop-loss orders tend to pile up. And as we were talking about before, smart money might intentionally push the price towards those areas just to trigger those stops before they reverse direction. It's like a little trap they set.
Yeah.
So if you can recognize when the price might be heading for one of those liquidity traps, it can help you avoid getting caught on the wrong side of the move.
So it's all about being super observant, paying attention to those SMC levels, watching how the price reacts, and always thinking about where that hidden liquidity might be lurking.
Exactly. And if I could give one piece of advice, it would be this. Never underestimate the importance of risk management. Always have those stop-loss orders in place. That's your safety net. And make sure your position sizes are appropriate for your risk tolerance. Don't bet the farm on any single trade.
Great advice. So in this deep dive, we've gone pretty deep, right? We've given a thorough analysis and a potential forecast for NASDAQ futures for today's New York session. We've used smart money concepts, we've looked at a bunch of different sources, and we've identified that key price range. We've explored a whole bunch of potential scenarios.
Yeah, and just to reiterate, right, this whole analysis, it's based on our interpretation of the technicals. It's not financial advice, and nobody should take it as such. These markets are risky, really risky, and everyone needs to do their own research, their own due diligence, before they even think about putting any money on the line.
Absolutely, yeah. Couldn't agree more. And for those of you out there who are interested in actually putting these concepts to work, we highly recommend you dig a little deeper. Do some more in-depth analysis of that NQ chart, look at different time frames, and most importantly, make sure you have a solid understanding of your own personal trading strategy. What are your goals? How much risk are you comfortable taking? These are the questions you need to answer for yourself.
And at the end of the day, right, smart money concepts, they're a fantastic framework for trying to understand how these big institutions might be behaving and where those inefficiencies in the market might exist. But they're not some kind of magical crystal ball. The market can always surprise us. So true. Okay, so here's a little food for thought as we wrap things up. Given all this interplay we've been talking about, between the technical elements of smart money concepts and those economic news releases that are scheduled to come out today, What are the specific price levels or news events that you're going to be glued to? What are the things that are going to either confirm or maybe completely blow up those scenarios we've outlined for NASDAQ futures today? Because staying informed and thinking critically, those are your best weapons in this game.
Couldn't said it better myself.
All right, that's all the time I've got for today. Thanks for tuning in. Catch you next time.